Hello, everybody. My name is Ed Clements. I'm a chartered financial consultant. I have a master's degree in financial services. And one of the opportunities I love to spend with clients is in discussing the difference between men at work and money at work. What are the problems and what are the solutions to increasing your wealth and decreasing your current taxes at the same time? In the next few minutes, we're going to discuss just what are the differences between man or woman at work and being fully taxed, or money at work, where the tax rates are substantially lower, and in some cases, zero taxes when your money is put to work. We're seeing here on this particular slide that there are problems, and the problems really are that today the maximum tax rates for California, including both federal and state taxes, are 51.9%. So the challenge is, what must we know to build wealth, to decrease our personal taxes, and to increase the profit on the income from different investments and real estate investments? We're going to explore that the solutions include using an all-inclusive trust deed, an AITD. We're going to look at the opportunity presented by those families that have gotten a notice of default and are in the first stage of being foreclosed on their homes. We're going to see and review FHA financing, where we can buy a home for as little as 3.5 cents per dollar. We want to also cover the fact that real estate can now be bought inside of your IRA. So do not leave your IRA dollars laying dormant. We also want to discuss the most important part of the tax code, which is IRC 121, where we can make up to $500,000 of tax-free profit on the sale of our home as long as we've lived in that home for 2 years or longer. On this particular slide, we're seeing that there are only really 4 types of income, and each type of income is taxed differently. The most substantial rates are, of course, taxed when individuals generate income and have withholding taxes, earned income. That not only has a state and federal, adding up to 51.9%, but also Social Security taxes taken from that type. The next type is passive income, almost as bad, but no Social Security taxes. Then we have our portfolio income, our capital gains, which not many people are aware of the fact that it was in the past 15%, but now it's a sliding scale up to 20% and a brand new additional 3.8% investment income tax. So it's almost 24% on capital gains now. What about the last area, this area in green? The profit on the sale of our home, zero tax. You need to look up IRC 121 in the tax code. It's very brief. Simply says buy a home, live there for 2 years or longer as a husband and wife, and the first $500,000 of profit on that house when you sell it are completely free of all taxes, and $250 if you're a single individual. Let's next discuss the whole issue of positive financial leverage. I guess the banks learned this first, when they could encourage you and I to put our savings in the bank at a low rate, and they would lend it out to business owners and other people to purchase homes and whatnot at a higher rate. That is positive financial leverage, and it's a good thing, not a bad thing. When we look at the center of the chart here, we're seeing there's 3 different types of ways that a person could buy a $100,000 home. They could buy it the newest and most exciting way using an AITD. In that case, they're buying a home and its present mortgage on the average for just 10 cents on the dollar. And because real estate in Southern California has increased more than 8% for the last 42 years, that's the average rate of return on real estate and appreciation. That means if you made a 10% purchase of a property and it went up 8%, that's an 80% return. Now, we also could go to a bank and get a conventional mortgage, but they're going to require at least 20% down. That means our return on that same house would only be 40%. And there are still many people that are listening to the terms and voices of their grandparents and have been convinced that all debt is bad and that they should always pay cash for their homes. I have some investor clients that do that today. When you pay 100% cash payment on buying a home and it goes up 8%, you've made only an 8% return. So we need to know the differences about how to use positive financial leverage to build wealth for our families. Let's suppose for a moment that we just sold a home and we have $100,000 of profit. And if that had been a home that you lived in 2 years, we found out from the previous slides that that income that we received, the profit, was all tax-free as long as it was under $500,000. Where do we put those funds at that point? We could choose maybe a bank CD or a stock account, and this is a sample of what the rates of return are likely to be from each of those types of investments. But the bottom item is saying that an AITD buyer, someone buying a home in the present mortgage on that home from someone who's in a pre-foreclosure position on their home, will get a return anywhere from 40 to 80%. That's the kind of return that we need to build significant wealth. Of all of the investments shown on the previous page, we find that most people today are feeling that the investment in Southern California residential real estate is by far the most secure. It has full collateral. We could buy the property at or below market values. It can return a definite amount of income because of the rental income coming from it. And you have a tangible, real asset to work with. If we have a $100,000 asset to work with, this slide is showing us three different choices. We may choose to put it in a bank CD at 1%. We may take the $100,000 and pay cash for a small condo, in which case the rate of return would be about 8% because that's the average appreciation rate. So that would be about an $8,000 return on your $100,000. Or what more and more people are seeking information on is how to become a buyer of properties that are in pre-foreclosure, where you're buying the home and the existing mortgage without having to qualify, no submission of your credit scores or financial statement or proof of income. All of it can be bought very simply, very quickly, and on the average, a 10% down payment would allow someone to get an 80% return on the $10,000 invested to buy the $100,000 home. An AITD, an all-inclusive trust deed, is now starting to be called the pass-it-on mortgage, because the buyer is buying not only the home, but also the mortgage that is currently on that home. This gives them the largest amount of financial leverage and a piece of California residential real estate. On this slide, we're looking at the advantages of buying from owners who have an NOD. Now, an NOD stands for a Notice of Default. It is the first step in the foreclosure process being taken by a bank. Some of the advantages to buyers in this case is that the NOD requires immediate action. That particular homeowner is facing short sale or foreclosure almost immediately. Owners will also lose their credit for a period of anywhere from 3 to 5 years, making it an extremely valuable tax deduction for mortgage interest, and the real estate taxes on their property is no longer going to be able to be deducted from their gross income. So having to become a tenant in a property cost the average family thousands of dollars of extra taxes that they'll pay as a renter compared to being a homeowner. Owners are able to make a decision and have an AITD completed all in the average of like 30 days. The owner also may, under the right circumstances, if the buyer is buying an income property rather than a home to live in, many times it can be preferable to have the seller stay in that home. That means no vacancy for the real estate investor, and very seldom do you have to make many upgrades in a property like that, because this is a property that the family has custom made to be just the way they like their home. And that could be a great advantage. The owners can also contain a lease or option so they can repurchase the properties in the future. So great advantages for this type of purchase. Here's an example of the kind of printout that we get on properties that have recently received a notice of default and are close to having their home lost in foreclosure or a short sale. This identifies the property. It tells us the date of sale. It tells us the amount of back payments that have not been made on their mortgage. And it also tells us what the market value of the property is. From all of this information, we can estimate this particular home, which has a market value of $819,000, could be purchased by a new buyer who needs a home or an investor for an approximate investment of $102,000. That's 12.5% in this particular case. If that happened to be the purchase amount based on the appreciation of an average of 8%, equaling $65,524, over the investment the buyer or investor just made, that's a 64% return on that initial down payment on a property. Here we're seeing a sample of a worksheet that we use for a property, the example on the previous slide. We see the NOD amount is $33,000. The cost of transferring the property is $55,000. The AITD, the extra coordination of the AITD documents themselves, about $8,000. Escrow and reserves, paying of the mortgage like 2 months in advance, another $5,000. So that's where the $102,000 total investment to purchase an $819,000 property, that's how those figures are determined. We have many investors and families that want to buy a home for themselves using an AITD type of process. This is the form that we use as we're discussing the option with the sellers of the property. It explains all of their choices and options and how in 30 days they can be relieved from the entire debt that's on their home. And when they do, they are retaining their credit scores and not having to become tenants for the next 3 to 5 years. A recent interview with Warren Buffett, an individual who's one of the richest people in our country, and whose investment skills are on the highest possible level. He stated that if he had the time to do so, he would be very interested in buying 200,000 or 300,000 single-family homes because of the rates on interest are lower than ever before, and he considers that type of investment, particularly Southern California residential properties, as being safer than most of the other types of stock and bond investments that one person could choose. Let's suppose for a moment that you are very successful in your particular business or profession, and you currently have $1 million of assets, and you need a new home for your family. Well, one choice would be to be a cash buyer and use your $1 million to buy a single $1 million home. But if you are a wiser investor, you would have to consider the better option of using the AITD method of buying homes that are in pre-foreclosure. That $1 million investment could actually purchase $10 million of Southern California real estate. And based on that 42-year average appreciation rate of 8.5%, that would mean that your $10 million of properties would appreciate $850,000 per year. Maybe a wiser choice than the single prepaid $1 million home. We wish to spend just a moment here talking about qualified retirement accounts. One of the best kept secrets seems to be that you no longer have to use that insurance company or that annuity or that bank or any of the investment sources, because you today can have a self-directed real estate IRA that your previous funds from 401k plans and other types of retirement plans can all be transferred into. That means that you can buy real estate with the assets of your IRA, increasing the rates of return to a much higher rate, potentially something in the category of 10, 15, 20% per year. That would help your retirement account grow significantly. So this is a choice for you to consider. Here I've listed out some of my background and accomplishments so that you may see the kind of experience that I've had over the last 25 years in helping individuals to accumulate wealth using primarily Southern California residential real estate, and while at the same time help them create wealth in their homes that is tax-free when they sell that home after living there for 2 years or longer. A tax-free profit up to $500,000. This is the kind of information that every American family needs to know, and use it to the extent that it will work for them. First, let me thank you for spending time on the information that we've covered so far today. And let me extend an invitation to come and spend half an hour here at my home or at my office or at your home. There's no charge to that at all. I just love sharing this kind of information with families that are concerned with building wealth for their children and grandchildren, finding ways to get more income for college education sources and for an earlier retirement. And I love to work on issues that will have an immediate impact on reducing the amount of current state and federal income tax that you're paying. I can help. Please call me, and I'll look forward to speaking with you. Have a great day.